Hey guys, welcome to Silicon Valley Girl. Today we're going to talk about my investing strategy for 2021. Just a reminder, it's going to be a year since I started investing in March 2021 because last year when the crisis hit, when everything went down, I was like, okay, this is my time to start investing. I was kind of hesitating before that, but then I realized, I have my money in my savings accounts, which give me what, 1% a year? It was 1.7 back then, now it's less than 1%. And last year my strategy was really basic. I invested in ETFs, index funds, bought some individual stocks, but I was very cautious. If you look at my portfolio overall, 80% of my portfolio, more than 80% would be in cash because I was just afraid to make any steps towards investing more. This year, number one thing that I'm going to change is that I will try to invest 40 to 50%. I'm hoping to be closer to 50% of what's left after I deduct all of the expenses. I had a video about my financial planning, but basically at the beginning of every month, I sit down and fill in my Excel spreadsheet where I have every income matched with its expenses. For example, YouTube course or my products or whatever. And then expenses are deducted. And I also deduct our family expenses. And then in the end, I'm left with a sum of money. So 50% of it would stay in savings accounts. And by this, I mean cash, because, tax payments, and if something happens like an emergency situation and the markets go down and I don't have this liquidity and I don't want to sell because of taxes again, so 50% would still be in cash, but the rest is going to be invested, and I'm going to tell you where I think it's going to be going this year. Of course, the strategy might change because I'm listening to things, reading different reports, and kind of adjusting based on what's happening on the market. But just another thing that I wanted to tell you, I'm just a blogger. I'm not a professional investor. I am just documenting my investing journey here. And the purpose of doing this is to read your comments, connect with like-minded people, because I just love when people reach out to me and say hey, I also start investing. This is something you should look at. By the way, I've read two big reports. I read Fidelity Report for 2021 and also ARK Invest Report. And ARK Invest Report was given to me by one of my followers. And this is why I'm doing all of this, because I'm just getting great ideas from you guys as well. So my 2020 portfolio grew at around 20 to 25% because I have different brokers that I use. But this doesn't mean that I'm an investing guru. I think if you take the average person that last year who started investing, their portfolio would grow at kind of similar rate. But a lot of other bloggers are talking about 40, 60% return on their investments. Again, I was just lucky to start investing in tech companies and stocks and ETFs and index funds that have a lot of tech companies, and they grew a lot in 2020. So by no means I'm an investment guru or somebody who can give advice. And another disclaimer before we continue to my strategy is that watch out for scammers. I know some scammers took Silicon Valley Girl name, but they added spaces and they kind of adjusted it in the way it looks like me, but it's not me. And in comments below, they would reply to your comments with a random WhatsApp number and would offer you to invest in Bitcoin. That's not me. I have a full-time manager who's just blocking those people off the channel. But unfortunately, they keep coming back. We reported this to YouTube. I don't know how am I able to stop them. I don't want to close the comment section, but I also realize that, this might cause some damage because I see you replying to them. So please, 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 I would never ever ask you to message me on WhatsApp and co-invest in Bitcoin with me. This is not me. I don't run any investment funds or whatever. Okay, let's go back to talking about my strategy. So first of all, I told you that I'm going to be keeping 50% in cash. The rest will be invested, hopefully, because I'm this person who's oh my God, the markets are down. Maybe I should, wait out because maybe that's a trend. Or, oh my God, the markets are up. Maybe it's too expensive. But this is why I love to come up with a strategy, and I love to tell myself this is automated. This is something I would do every month, and I won't be distracted by all the signals that I'm getting from everywhere. Second strategy, hopefully in 2022, we will add a real estate item, something for real estate to our portfolio, buy a house. I'm not sure where. I was actually looking at Austin. In order to do that, I need to kind of change my tax strategy because, again, I was deducting a lot last year. I was reinvesting a lot back into business. I spent tens of thousands of dollars on Instagram ads because I wanted to boost my profile and also save on taxes. I invested a lot into different team members and invested a lot into equipment, only to realize that this is a bad strategy for asking for mortgage. So I started working with a mortgage broker, and this year I will be deducting less from my business. I will still be investing, of course, better equipment, better people, better team, but it will be limited. So I won't be like investing in ads to boost engagement on my Instagram profile. I'm fine with whatever is going on, and I'm gonna rely on organic growth. But anyways, this is another strategy that's changing. Policygenius, which is an insurance marketplace, is sponsoring this video. And last year when I started, again, investing and thinking about how can I protect my money, I started talking to CPAs and lawyers here, and I got 3 advice from them. First of all, start investing. Second of all, create a living trust where you just transfer your assets so in case something happens, you know where everything goes. And third, get a life insurance. And again, life insurance is something I didn't really think about. I was like, do I really need to get it? And this year it's definitely on my list. You can save 50% or more on life insurance by comparing quotes with Policygenius. And I just love when companies make everything easier, because otherwise I would have had to go to like insurance brokers and inquire about the price and pay extra fees. So Policygenius is something that I'm using to get my life insurance. By using Policygenius, you get personalized quotes from top companies in minutes. You can easily apply online and compare your quotes all in one place. And you can talk to real people there and get unbiased advice from Policygenius experts. They also handle everything: paperwork, scheduling, negotiation with the companies for you. Again, this is something I really care about, somebody saving my time. Policygenius never sells your information to other companies. That means you're not getting those 10 calls from unknown IDs tomorrow. And Policygenius doesn't add any extra fees. You could save $1,300 or more per year by using Policygenius to compare life insurance policies. Visit policygenius.com/Silicon Valley Girl to shop the market and start saving today. Now let's move into what's happening on the market. So according to ARK, there's no bubble on the stock market, but there is a bubble on the bonds market, and bonds are valued higher than their returns, and there is no economic incentive to buy bonds any longer. And I've heard that from many people around me, so I stopped buying an index fund on Vanguard that was focused on government bonds, and I will be redirecting that money to something else. So I am not sure about this bubble. Like, a lot of people talk about this bubble on the stock market. Again, it's up to you who you believe, it's up to you who you listen to. But I decided that I'm not gonna buy into big tech company stocks anymore, at least this year, because I already have Amazon, I already have Google, I already have Apple, I already have Tesla, and I will just invest into an ETF of value stocks. What is a value stock? Value stock is a stock of a company that doesn't have high multiples, but has great financial results. What is a multiple? So for example, your company makes $10 million a year, and the multiple is, I've seen like multiples 20, 30, 40, and it's valued at $400 million on the market. Some people might say it's crazy. So basically there is an ETF that focuses on these value stocks. It's called Russell 2000, and it focuses on small cap stock market. I've already started buying into it using iShares Russell 2000 ETF. Now, another opinion is that global economic recovery could benefit emerging markets such as China, India, and other Asian markets where a lot of American companies are moving their production. And if we look at the graph by Fidelity, in terms of like how economies are recovering, China is leading the way and they're recovering the fastest. So I decided that I will start buying China related ETF. So last year I bought some Alibaba stock right before the news came out that Jack Ma disappeared, and the stock went down. I was like, wow, that was a bad idea. Like, I know that China is not the US and like they have a different game at play, and I just regretted doing that. But then the stock grew again. So this year I will still invest in China, but I will invest in an ETF. I've chosen iShares MSCI China, and I'm also adding iShares MSCI All Country Asia except Japan ETF in order to diversify my portfolio and add stocks of large and mid-sized companies in China and in other Asian markets. Now, after reading ARK Invest outlook for 2021, I just got so inspired by their strategy, because their strategy is to focus on companies that are Teslas in their own markets. Like Tesla is changing the automobile market, and there are companies like this in every market. And by Teslas of the market, they mean companies that focus on investing in their future and not on showing short-term profits in order to increase dividends and make their investors happy. They are just focusing on kind of changing the world and developing new technology. And I decided that I want more of those companies in my portfolio, and ARK does their own ETFs, and I decided to add them to my portfolio as well. So I'm adding ARK Autonomous Technology and Robotics ETF. By the way, guys, if you want to read that report, I'm gonna leave a link below. I love their PDF. Took me a while, took me several days to go through it. But again, just because I'm in Silicon Valley and I just get inspired by all the innovation, and I know a lot of companies that they're talking about because, well, I drive past their offices every week, and I just love this idea. And because I'm a long-term investor, I think this would show better gains compared to just a standard S&P 500 index. So I'm adding ARK Autonomous Technology and Robotics ETF. I'm adding ARK Genomic Revolution because, well, biotech. And because this year I am not investing in real estate, but I really want to have a fraction of my portfolio invested in real estate, I decided to add iShares Global REIT ETF, which just tracks global real estate markets. The only problem with ETFs is that you can't automate investing in ETFs. You have to kind of manually log into your app and buy those ETFs. But I'm just hoping that I'm going to be disciplined, and I am disciplined because I track my financials every month, but I still invest in index funds. And the difference between an index fund and ETF, the primary difference is that investing in index fund can be automated. And I still have some index funds that I buy automatically, and that is VIGAX, stocks of large US companies. Yes, we talked about there might be a bubble, there might not be a bubble, but still, Fidelity, for example, says that big companies will still continue to grow because this online trend is continuing. Google and Amazon are on top of it. So, this index fund has those shares as well. VTSAX, entire US market, large, mid, and small cap stocks. And VTIAX, these are stocks of both developed and emerging markets. 25% of whatever is left at the end of the month is going to be equally invested in index funds and ETFs I just mentioned. 23% stocks. Stocks would pretty much reflect the strategy that I'm sticking to, like growth companies, companies that would trend in the future, green companies that use sustainable methods, but there is no plan like I want 10% of my portfolio to be Tesla or 5% of my portfolio to be this. Well, two rules. Number one is that every single stock shouldn't make up more than 5% of my portfolio for the purpose of diversification. And the second rule is that I do dollar cost averaging. So if I decide that 5% of my portfolio should be Tesla, then I will be just buying some of Tesla stocks every month or every 2 weeks, but not in a single day. So I still keep those rules. And with the stocks, I will just go with the flow. I will see what other people are doing. I will analyze, read news. I like Morning Brew subscription. So all of that stuff. Okay. And the last but not the least, you're wondering where the rest goes, 2%. If you showed me this video last year, I'd be like, you're probably crazy. But this is how the world is changing. So 2% goes to Bitcoin, 2 to 3%. Again, the percentages fluctuate, but still. So again, ARK Invest and a lot of other reports are talking about Bitcoin becoming corporate cash. We see this trend already starting. Square invested 1% of their cash into Bitcoin, while Elon invested part of Tesla's cash into Bitcoin. And what ARK says, based on daily returns across asset classes during the past 10 years, our analysis suggests that allocations to Bitcoin should range from $255 when minimizing volatility and $655 when maximizing returns. And they also say that with this trend, like with corporations investing even like 1 to 2% of their cash into Bitcoin, it could grow $40,000 more. If all of S&P 500 companies decide to put a fraction of their cash into Bitcoin, it would go up in price by $400,000. And again, I know it's risky, and I started investing in Bitcoin back in 2017. At the end of 2017, I kind of transferred the majority of my portfolio to Dima because he wanted to buy, I wanted to sell. And, you know, I kept whatever was left, and I had like $3,000 or $4,000 in Bitcoin, which is now $14,000. And I decided that, you know, okay, I will just keep investing. I know a lot of high-profile people here in Silicon Valley talk about Bitcoin being like 500,000, well, 100,000, 200,000, 500,000. And I did an interview with Tim Draper, and he just loves Bitcoin. So, you know, I don't want to miss out on that, but I also don't want to be too risky with my investment strategy. So 2 or 3% would go into Bitcoin. That was it for me for today, guys. I will leave all the links below to the brokers that I'm using, and I use Robinhood, I use Webull, I use Vanguard, I use Interactive Brokers, I use Coinbase. So all the links will be below. They're affiliate, which means that if you use them, you will get some stocks for free, and I will get some stocks for free. Win-win. If you don't want me to get free stocks, and if you don't want to get free stocks, just Google those brokers. Thank you guys so much for watching this video up to the very end. If you have any comments, any questions, any ideas, write them down below. Watch out for scammers getting back to you in the comment section. I'm really sorry for that again. And yeah, I will see you very soon in my next videos. Bye bye.